The century of stock market history, the level of stock prices early 1972 by Benjamin Graham. An investor portfolio of the common stock will represent a small cross-section of an immense and formidable institution known as the stock market. The prudence suggested that he have adequate idea of stock market history in terms of particulars of major fluctuation in the price level and the various relationship between stock prices as a whole and the earning and the dividend. In the background, he may be in the position to form some worthwhile judgment of attractiveness or dangers in the level of market and present itself in different times. By coincidence, useful statistic data about price, earning, and dividend over period back 100 years, 1871, the material is not early as full or dependent. The first half period as the second, but it will always so. In this chapter, we shall present the figures in highly condensed form with two objectives in view. The first view is to show a general manner in which stock had made their underlying advance through various cycles of past century. The second is a view of picture in terms of successive 10 years adventures, not only a stock price but the earning and dividend as well. To keep bubbling up the various relationship between 3 point factors with the wealth of material as background, we shall pass on consideration level of stock prices at the beginning of 1972. The long-term history of stock market is summarized in two tables in chart. Set for the low and high prices of the 1919 bear and bull market cycles in the past 100 years. We have used two indicators here. The first represent the combination of early studies, but the Cowhill's Commission going back to 1980 which has been spliced up and continue to date a well-known standard of poor composite index of 500 stocks. Second is even more celebrated Dow Jones Industrial Average (DJIA) of Dow, which dates back in 1897, counting 30 companies, which are the one of the American telephone, telegraph, and the other 29 largest industrial establishment. The major stock swing between 1871 to 1971. So major stocks for Dow Standard 500 Composite, high low decline, high low and decline. So industry Dow industry 1871 low 41 high 69 low 5.9 5.13. Low at the shown 38% decline. High low 31 40. Okay, hang on. Okay. Chart one prescribed the courtesy of standards of power despite the market fluctuation of 1425 industries stock index 9,900 to 1970. A corresponding chart available for the DJI will look very much the same. The reader will note the three quite distinct patterns, each covering over third part of 70 years. The first one is 1900 1924 show the most of the series of other similar market cycle lasting through 3 to 5 years. The annual advantages of this period average 3%. We moved on the view of new era bull market accumulating in 1929, which is a terrible aftermath collapse. Followed the quite irregular fluctuation until 1980. The comparable average level is 1949, that is 1924, which finds the annual rate of advantage for 1.5%. Here's a close. Our second period found the public with no enthusiasm at all the common stock, but the rule of opposites at the same time with the rise, the beginning of the highest bull markets in our history. Presented at the last third of the chart, a phenomenon may have risen this accumulation in December 1968 and eliminated Standard and Poor 495 industry, 108 for 100 stock composite. There are fairly important setbacks in 1949 and 1968, especially 1956, 57, 1961, 62. But the recoveries, therefore, were rapid. They have been denominated in the long acceptance similarities as the resistance a single bull market rather than separate market cycle between the low level of 1962. Dow's of mid 1949 and high of 1999 early 1986. The advantages has been more than 6 over 17 years, which is an average composite of 11% per year. Not counting the dividend, saying it's 3.5% per annum. Advance of Standard and Poor Composite Index somewhat greater than the DJI accrual of 14 to 96. These 14% are better return, where the document of 1963 and later is much publicized study. It creates a natural satisfaction on the Wall Street with such a fine achievement and a quite illogical and dangerous conviction. Equally marvelous result would be accepted for common stocks in the future. Few people seem to have been bothered by the thought that very existence of the rise might indicate that it had been overdone. The subsequent decline from 1968 high to 1970 low was 36%. The Standard and Poor Composite 37% DJI large since 44% suffered in 1939-1942, which has reflected the peril and uncertainty of Pearl Harbor. The dramatic manner so characteristic of Wall Street and the low level of May 1970 is followed by the massive speedily recovery of both average and establishment of a new all-time high of Standard and Poor industry in early 1972. The annual rate of price advantage in 1949-1970 works out for 9% S&P Composite Industrial Index using the average figures of both years. The rate of climb was, of course, much greater than the similar period before 1950. But the last decade, the rate of advance over of 5.25% for the S&P Composite Index and only the ones a similar 3% of GI. Chart 1 Standard and Poor Price Index. Monthly average of 425 stocks. Rising, fall, rise, fall, rise, fall, rise, fall, rise, fall, fall, rise. It's been rising. The record of price movement should be supplementary for corresponding figures of earning and dividend in order to provide an overall view that happens over the share economy over the 10 decades. We present an conspicuous this kind of table, the good deal, they expect from the reader for the study all the figures that care, but some of them hope that they will be interesting and intrinsic. Let us comment on them follow. The full decade figures move on year to year fluctuation and leave in general publication of persistent growth. Only two of the 9 decades after the first showed decrease in the earnings of average prices, 1991 to 1900 and 1931 to 1940, and no decade of 1900 shows a decrease in average dividend. But the rate of growth is all the three categories are quite variable. The general performance in the World War II has been superior than the earlier decades, but the advantage of 1960 was a less pronounced than that of the 1950. The investor cannot tell from the record what percentage gain in earning of a dividend and prices he may expect it to next 10 years, but it doesn't supply all the encouragement it needs for the consistent policy of common stock investments. However, the point should be made before here that are disclosed in our table. Year 1970 was marked by the defined deterioration of overall earning per share of the composite. The rate of profit of investing capital fell into the lowest percentage since the World War II years. Equals like a fact, a considerable number of companies reported net losses in the year, and many of them financially troubled. And for the first time in the 3 decades, there were quite a few important bankruptcy procedures. These facts and much more other have prompted and the statement made above. And the great boom era may have come into the 1960 1970. A striking feature of the table 32, the change in the price earning ratio of World War II in June 1949, S&P Composite Index sold at only 6.3 times the applicable earning for the past 12 months. In March 1961, the ratio was 22.9 times. Similarly, the dividend yield was S&P Index fallen from 7% in 1949 to only 3% in 1961. The contrast heightened by the fact that the interest rate on the high-grade bonds meanwhile rise from 2.9% to 4.5%. This is certainly the most remarkable turnabout in the public attribute in all the stock market history. People of the long experience and inmate caution the passage of one nature to another, carry a strong warning of trouble ahead. They could not help thinking apparently of the 1926 to 1929 bull market and their tragic aftermath. But these fears have not been confined by the event. True, the closing price of DJI in 1970 was same as it was 6.5% early. Much and Herald showing 6 provided to be mainly much of the series of high hills and then down again, but nothing that happened either be business to stock prices that can compare the bear market and depression 1929 to 1932. Table 3 to picture of the stock market performed 1871 to 1970. Period, average price, average earning, average PE ratios, dividend, average yield, average payout, annual growth rate, earning and dividend. So, 3 earning 0.32, average price 0.32, that is 11 percentage of the earning. 15, 13, 10, 13, 17, 32, 13, 17, 15, 82, 16. Dividend averages on the 0.21, 24, 19, 35, 0.5, 0.75, 0.78, 1, 2, 3. Okay. Average yield 66444. Average pay 65, 75, 64, 58. Okay, it's increasing. The following database are largely and the figures appears in the Molodowski article, the stock valuation of the stock price of this annual financial analyst. Stock valuation, stock prices, financial analyst journal, May 1960. They are in terms are taken from the Cowley's Commission book, Common Stock Indexes over a year before 1926, from the spliced on the Standard and Poor 500 Stock Composite Index for the 1926 today. The annual growth rate figures are Molodowski complaints covered successive 21-year period on the 1990s to growth rate from 1968, 1970, 1958 to 1960. These growth rate figures are for 1954 to 1956 and 1947, 1949, 1961 to 1963, 1954 to 1956 and 1968 to 1970, 1958 to 1960. So the stock market level in early 1952. The century-long conspicuous of stocks prices, earnings and dividends before our eyes. Let us try to draw some conclusion about the level of 900 in DJI and 100 of S&P Composite Index in January 1972. In each of this former edition, we have discussed the level of stock market at the time of writing and the entry events too. Answer the question whether it was too high for conservative purchase. Reader may find information to review the conclusion we reached on this earlier conclusion questions. Such occasions. This is not entirely on exercising a self-punishment. It is simply a sort of connection tissue that links the various stages of stock market in the past 20 years, and also taken from the life picture of difficult facing anyone who tries to reach information and crucial judgment on certain market level. Let us first reproduce the summary of 1948, 1953, 1959 analysis that we have given the 1965 edition. 1948 was applied conservative standards. In Dow Jones level 180 was found no difficulty in reaching the conclusion that it was not too high in relation to underlying valuation. When we approached this problem in 1953, the annual average market level for the year has reached 275. And the gain over 50% of the 5 years, we asked ourselves the same question, namely, whether, in our opinion, the level of 275 the Dow Jones Industries was or were not too high for a sound investment. The level of subsequent spectacular advantages may seem strange to have a report that it was by no means easy for us to reach the defined conclusion as to attractive of 1953 level. We did say positive enough that from the standpoint of value of indications, our chief investment guide conclusion about 153 stock prices must be favorable. But we have concerned about the fact that 1953 the average has advanced over a long period. That is the most bull market of the past and has absolute level of historic high. Setting out the factors against our favorable value judgment, we advised a cautious and compromised policy. As it turns out that it was a particular brilliant counsel. A good from prefer Prophet would have foreseen the market level and due to advantage of additional 100% next 5 years. Perhaps we should add a self-defense and view in a way those business or stock market forecasting. As our he was and had a better inking that we did of what they had. At the beginning of 1959, we found the DJ all the time of 584. Our lengthy analytical made all points of view may by summarizing the following page 59 to 59 edition. In sum, we feel compelled to express the conclusion that the percent level of stock prices is a dangerous one. It may well be Earliest because the price are already far too high. But even if this is not the case of market momentum in such an inevitable to carry on unjustifiable height, frankly, we cannot imagine the market of the future in which there will be never be any serious losses, and in which every tyro will be guaranteed large profit on a stock purchase. The cautious we expressed in 1959 are somewhat better justified by the skill that was our corresponding 1954, yet it was far fully vindicted. The DJI advanced to 685 to 1961 and fell into the little below 584 level. Later, the year advantage against 750 in 1961, then declined in the panic of 1536 May, showing the loss of 27% within the brief period of 6 months. At the same time, there was a far more serious shrinkage in the most popular stock loss, as evidenced by the striking fall of indisputable leader International Business Mission from the high of 1607 in December 1961 to low 300 in June 1962. The period saw a complete debacle in the host of newly launched common stocks of small enterprises, so called the hot issues, which has been offered to the public at a ridiculously high price and then had been further pushed up by needless speculation to level little short of insane. Many of this lost 90% and more of the quotation in just a few months. The collapse of the first half of 1962 was concerting, if not disastrous, in many acknowledged speculators and perhaps to many more prudent people who call themselves investors. But this turnabout that come later, they take years, was equally unsuspected by the financial community. The stock market average resumed the upward course and producing the following sequence: DJI Standard and Poor 500 stock comprise. December, DJI 535.72.6. June 62, 536.52. November 64, 892.86. This recovery is a new ascent of common stock prices were indeed remarkable and created a corresponding revision of the Wall Street sentiment. At the low level of June 1962, prediction has appeared predominantly bearish, and after the partial recovery to the end of that year, they were mixed, leaning the skeptical side. But outside of 1964, the natural optimism the brokerage firms was again manifest. Nearly all the forecasts were on the bull side, and they all continued through 1964 advance. We then approached the task of uprising the November 1964 level. The stock price 8692 DJI. After discussing the learned about the numerous angles, we reached three main conclusions. The first was the old standard of valuation appear inapplicable. New standard have not yet been tested by them. Second was that the investor must base on the policies on the existence of major uncertainties. The impossible and the possibility is composed the extreme. On the other hand, of the protracted and further advantage of the market levels is 50% to 1350 for the DJI. On the other hand, the large unhearable collapse of the same magnitude, bringing average of neighbors say 450. P63 of 1965 edition. This third was expressed much more defined terms. He said, speaking bluntly, in 1964, price level is not too high. How we could say that the price level is too high? The chapter close to follow. The course to follow. The investor who should not conclude that 1964 market level is dangerous merely because they read in this book. They must weight our reasoning against a contrary reason they will hear from most competent and experienced people on Wall Street. In the same, in the and in each one must make its own decision, accepting our responsibility. Therefore, we suggest herefore, if the investor in the doubt as to which course to pursue, he should choose the path of caution. The principle of investment, as set forth therein, could call of the following policy: 1964 condition order of urgencies. No borrowing to buy or hold security. No increase in portion of funds held in common stock. A reduction in common stock holding where need to bring down to maximum 50% of the total portfolio. The capital gain tax must be paid with good grace as possible, and the proceeding invested in the first quality bonds held in the savings deposit. Investor who had sometimes in following bona fide dollar cost average plan, and the logic elect either to continue their periodic purchase unchanged or suspended them until they feel the market level is too long and dangerous. We should advise rather strongly against the initiation of a new dollar advancing plan on the lands of 1964 level, since many investors would not have stamina to pursue such scheme if the results soon after initiating should appear highly unfavorable. The time we can say that our conscience was vindicated, the DJI advanced about 11% further to 1995, but then fell irregularity low 632 1970, and finishing their year 1918 839. The same kind of debate took place in the price hot issues apparatus. The decline running as much as 90% we have happened in 1961 to 62 setback. And as pointed out in the introduction, the whole financial picture appeared to have changed in the direction of less enthusiasm and greater doubt. A single fact may summarize the story. The DJIA closed 1970 at a level lower than 6 years before. The first time such a thing has happened in 1944. Such were our effort to evaluate the former stock market levels. In there, anything we and our readers can learn from them. We consider the market level favorable of investment in 1948 and 1953, but too cautiously in the later year, dangerously in 1959, in 884 of DGI, and too high in 1892, in 1964. All these judgments could have defended even today by the adroit argument, but in the doubtful even today by the adroit argument, but doubtful if they have been useless as one more Parisian Council in favor of consistent controlled common policy in the one hand and discouraging interviews to beat the market or to pick the winners in the other. Nonetheless, we think our readers may derive some benefit from the renewed consideration of the level of stock market. This time as to 1971, even if they had say will prove more interesting than practical useful or more indicative than a conclusion. There is a fine passage near the beginning of an Aristotle ethics that goes, it is a mark of educated mind to expect the amount of exactness which the nature of particular subject admits. It is equally unreasonable to one concept merely probable conclusion from the mathematician deemed strict demonstration from the orator.